I'm going to take a deep look at a popular gold EA on MQL5 called Quantum Queen MT5 and share some strong warnings about it. If you look at the forward results, you see around plus 900% total return win rate of 76% profit factor 2.8, a very smooth, upward sloping equity curve. At first glance, it looks like an extremely powerful EA, right? But to jump straight to the point, I see this as a very dangerous grid plus averaging down EA with a high risk of blowing up the account in one shot. In this video, I'll cover, from a trader's perspective, what's really behind the nice looking forward results, the risk shown in the 20-year backtest, the logic structure, and the blow-up risk. Let's go through these step by step. First, let's talk about the forward numbers. On the official signal for Quantum Queen MT5, the performance from 2024 shows total growth of about plus 900% win rate, around 76% PF, around 2.8, and an equity curve that looks very smooth and stable. If you only look at this, it's easy to think, I really want to buy this EA. However, on the very same screen, you can also see a maximum drawdown of over 36%, maximum margin usage of 94%. This is extremely aggressive. Using 94% of the margin means the account is basically in a state where one more strong move against the position could kill it instantly. What's even more concerning is that there are a lot of deposits and withdrawals made along the way. The initial deposit is just $100 over time. Total deposits reach about $6,000. Total withdrawals are about $7,600. So capital is repeatedly being added and removed during the signal. By inserting deposits and withdrawals, you can massage how the equity curve and drawdown look. For example, if you add more funds when there's a big floating loss, the drawdown percentage on the chart looks smaller and more harmless. If you keep withdrawing money while the balance grows, it can make it seem like a small starting balance exploded into a huge amount. This signal shows a headline number of 982% growth, but in reality the account balance is being adjusted multiple times along the way. So you cannot expect to copy this signal and get the same results on your own account. When you look at forward tests, you should always assume that the curve might not be a pure compounding curve, but a curve that has been processed by deposits and withdrawals. That's exactly the kind of suspicion you need to have here. Next, let's zoom in on the trade history. The symbol is ZOSD only. Almost all positions are by trades. The lot size is fixed at 0.02 entries, are stacked one after another over time, and multiple positions are often closed at exactly the same time. This is a textbook grid plus averaging down exit pattern. When price moves against the position, the EA does not cut the loss. It keeps adding buys. It holds floating losses while averaging down the entry price. When price later bounces back, it closes the entire basket at a small total profit. If you keep doing this, the equity curve naturally becomes small step-like gains, forming a very clean upward slope. So it looks extremely stable on the surface. But this is exactly the kind of equity curve any grid EA can produce. And in the forward results, we're seeing maximum drawdown over 36%, maximum margin usage of 94%. So the strategy has already been operating at a level where, if the trend had continued just a bit longer, the account could easily have blown up right there. In other words, the smooth curve we see is just the survivor's snapshot from a range-like market, not proof of safety. Now let's look at the backtest that I ran myself. Period. January 2005 to November 2025 symbol. ZOSD initial balance. $10,000 lot size. Fixed 0.01 spread. 30 points PF. 3.4 total net profit, about plus $4,300 total trades, 3,301 if you only look at the numbers. This also looks very good. The equity curve is basically a clean upward trend for around 20 years. However, there's an important detail. The maximum equity drawdown is about $2,284 with just 0.01 lots. At 0.01 lots, maximum equity drawdown about $2,284 at 0.10 lots. Theoretically around $22,000 of drawdown at 1.00 lot. That's easily a full account blow up. So if you only look at percentages like maximum drawdown around 18%, that seems safe. You're missing the point. This is an EA where increasing the lot size even a little can cause the absolute drawdown in dollars to explode. And there's an even bigger red flag. The backtest period is set from 2005, but most of the actual trades don't appear until around 2018 onward. From 2005 to 2017, there's almost no trading at all. This doesn't just look like it happened to be flat. It strongly suggests the possibility that the EA's logic or filters have been tuned in a way that effectively skips unfavorable historical periods. A backtest is supposed to show what happens when you apply the same rules consistently across the entire historical market. But in this case, we have 20 years specified in the settings, while actual trading is concentrated in just the last few years. That behavior seriously undermines the credibility of the EA. So even though the curve and PF look great on the surface, from a risk and transparency standpoint, this backtest is not something you can blindly trust. Putting everything together, Quantum Queen MT5 is a gold-only scalping plus grid EA. It shows very smooth, attractive equity curves in both forward and back tests, but behind that, it's actually a buy-side averaging down grid with extremely tight spacing running at margin usage levels up to 94%, i.e., one step away from disaster. Showing over $2,000 of equity drawdown even at 0.01 lots, and using a backtest where trades only appear from around 2018 despite the period starting in 2005. From these points, I would say this EA is absolutely not suitable for long-term or high-lot operation. When gold is in a range or gentle uptrend, it can steadily accumulate profits, but once a strong downtrend hits, there is a very real risk that years of profit and the entire account will be wiped out in one move. Maybe it can be used as a small experimental account with very tiny lots, funded purely with money you can afford to lose, but for your main live account prop firm accounts serious capital you can't afford to lose. I personally cannot recommend this EA at all. If you get drawn in by the nice equity curve and high PF alone, you're likely to notice the structural blow-up risk only when it's too late. When evaluating EAs, make sure you look not only at the headline numbers, but also at the absolute size of equity drawdowns, how risk explodes when you increase the lot size, how deposits/withdrawals and backtest periods are handled and presented. Only after checking these points carefully should you decide whether an EA like Quantum Queen MT5 is really worth using.